Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Friends, today we have a topic that is cost accounting. Cost accounting is basically an art and science of recording, classifying, summarizing, and analyzing the cost related concepts to help the management to take any prudent decisions or prudent business decisions. Let's try and understand this in a detailed format, what exactly cost accounting is all about. First and the foremost thing, you need to understand that what is cost accounting. See, cost accounting comes down to two single words. One is called the cost, other one is called the accounting. First, let's you understand what cost is, and then we will look at the accounting part. Now, what is cost? Cost is basically what we call as the expense that has been incurred by the particular unit. In another way, the cost is what the business sacrifice in order to produce one unit of products. Next, let's understand what is accounting. Accounting is sort of, you can say, art and science both, of recording, classifying, and summarizing and analyzing inputs to make a sense of the information related to financial management or cost. Let's start with the definition first. Cost accounting is sort of an art and science of recording, classifying, summarizing, analyzing cost to help management make prudent business decisions. The purpose of the cost accounting is as follow. First, it is used for cost control. See, the first function of the cost accounting is to control the cost within the what we call as the budgetary limits or the budgetary constraints management has set for the particular products or service. So this is very important since management allocates limited resources to particular projects or production processes. Second, the cost computations. So this is the main function of the cost accounting, and this is the source of all the other functions of the cost accounting. In this section, we will see how we can calculate the cost of sales per unit for particular product. Third is the cost reductions. So cost computation helps the company to reduce the cost on projects and processes. So reduction in the cost means more profits, and since margin will naturally decrease. Now let's understand between direct costs and indirect cost in cost accounting. Now, direct costs are the costs that are directly related. Let me write over here direct costs. They are directly related for in producing the goods, and that means that direct cost can be directly identified as being used in the production of goods. Like for example, we can talk about direct material that has been used and the direct labor that is used in producing goods. So this cost we can identify as what we call as direct cost. Now there is a thing called indirect costs. On the other hand, are the costs which can be identified easily. The reason this cost can be identified separately because the cost assists in functioning multiple activities. Like for example, the rent business pays for running production operations of goods. How much is used for preparing the raw material, or how much is used to install the simulation system that can train the workers. So understanding this two types of costs is important, since we would be using this cost in calculation of the cost of sales per unit. We'll be using it for the cost of sales per unit of a particular product. Right. Now, there are things called fixed cost, variable cost, semi-variable cost in cost accounting. We'll try and discuss them. See, fixed costs are the costs that do not change. They do not change with the change in the increase in the production unit. That means this cost remains similar within the broad or range of the spectrum. Plus, the per unit fixed cost changes as for the production increase or decrease. Like for example, the rent is a fixed cost. Even if the production increases or decreases, the business needs to pay the same rent month in or month out, and There's a thing called variable cost and is exact opposite of what is called as the fixed cost. The variable cost changes as per the increase and decrease of the what we call as the production units. So, but even if the total variable cost, if it changes per unit, it remains the same irrespective of the changes of production unit. Like for example, the cost of raw material is variable cost. The cost of raw material is VC, the variable cost. Now, the total cost of the raw material changes if the production increases or decreases, but per unit cost of raw material will remain the same even if the production increases or decreases. Now, if we talk about what we call as semi-variable costs, both components are present. Semi-variable cost is the combination of both the fixed costs and the variable costs. Let's say that you pay $1,000 per month as fixed salary all your workers, and the workers who produce more than 50 units of toys every month, they get an additional $5 for every additional unit produced. So the sort of wages will be called as the semi-variable cost. The cost accounting examples and format. The cost accounting is much more than the cost statement. But still, cost accounting example will give us an idea about how to calculate the cost of sales per unit for a particular product. Like let's say MNC factory has the following information. From the below furnished information, you need to calculate per unit cost of sales. Raw material, the opening stock of raw material is 50,000. The closing stock is 40,000. The purchases for the period is $1,45,000. There is direct labor, which is let's say $1,00,000. There is works overhead, that is standing at 40,000, and there is admin overheads, that is 20,000. Then there is S&D, that is 30,000, and the final is the finished units, that is standing at 1 lakh units. So what we need to do is we have to find out the cost of sales per unit. In this example, every input is given. We just need to put the figures in the right place. The raw material opening stock, that is 50,000. Then we need to add over here what we call as the purchases. Then we need to deduct here what we call as the closing stock, which is 40,000, and we'll keep this, sorry, raw materials closing stock over here 40,000. So that will give us the cost of material consumed, which is going to be 50 plus 1,45,000 plus 40. So it will be 1,55,000. Over here we need to add direct labor, we get what is called the prime cost. We'll add both of this. Then we need to add over here what we call as work overheads, which is 40,000. That will give us works cost 2,50,000 plus 40. And finally over here we'll add any admin overheads, which is 20,000, and that will give us the cost of production. Need to add this up. Finally add the S&D expenditure, 30,000. Total cost of sales is going to be this addition, that's 3,45,000. Then we get what is called as the finished units, that's gonna be, which is 1 lakh units. So our cost of sales per unit is going to be total cost of sales divided by number of units, that's 3.45 per unit. So this is how the cost sheet has been prepared. I hope you have got a real idea regarding how things work out in this particular topic. That's it for this end. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.